This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. Today, I am happy to host Florian Fritz from the Money Hero Academy. Florian, welcome to the program.
Gabe, thanks for inviting me. It's great to be here.
Florian, tell us a little bit about your background. From what I understand, Florian, you have a background as a financial advisor, as a real estate professional, as an investor, and now you run the Money Hero Academy. But let's start us off with your finance background and how did you end up in this industry in finance and investing, and how did you end up starting the Money Hero Academy?
Okay, great. That's a lot of questions in one. Well, how did I get to become a financial advisor? Actually, I finished university. I have a degree in business administration, international business administration. And I finished in the crisis after the dot-com bubble. So there were not a lot of jobs at that time. So the first thing I did, not seeing lots of job offers, was just book a flight and travel around the world for 6 months, which was a pretty good idea. When I came back, it wasn't much better. But what happened was that a friend, well, she didn't call me herself, but she had someone call me from a financial advisory company. And they asked me if I was interested in starting there. And it sounded pretty interesting. I was interested in money and finance and all that, and building something with that company. So that's how I got into financial advisory. And we had a lot of fun there. I learned a lot, and I made good money. And I also made a big mistake that I tell my clients not to do, which was spend all the money that I made. And then came the next crisis in 2008. And until then, I already had noticed that there are a couple of products that I don't really like because, client takes all the risk and banks makes all the money. And then in the subprime crisis, 2007, 2008, that was got really big, right? People still paid their fees, but lost money at the same time. And the bankers still got all those bonuses. So I wanted to do something different.
Yeah, and let me stop you right there because I know exactly what you are referring to. I always thought it was a very interesting business model for mutual funds, right? Like typically, most people go to the bank, they get a mutual fund for the 401k or their retirement plan, or sometimes they get one from their employer. And you sign up for one of these mutual funds and you are paying that management fee of 1% or 2% per year, regardless of how the fund performs, right? If the fund does a great job, you pay 2%, which I think is fair. If the fund performs poorly and loses all kinds of money, you're still paying 2%. You're paying 2% regardless of performance. And there aren't too many businesses where people put up with that, right? Like if I go to a restaurant and I get poor service, I'm not going to be happy about tipping, right? If I go get my car fixed and I get poor service, I'm not going to be happy about, paying full price or whatever. But for some reason, the finance industry and the investment industry still gets away with it. They're one of the few industries that get away with charging a fee regardless of performance.
Absolutely. And you often pay 5% upfront to get into that mutual fund. Well, that fund has to return 5% before you break even. In a bad market, that might take a while.
Absolutely. Yeah, it might take a few years in a bad downturn. Yeah.
And it hasn't changed. I've just recently, some friend asked me, can you have a look at those funds somebody offered me? And I looked at those funds, and so I told her, hey, you're paying 5% up front and you're paying 2-point-something% every single year. Do you know how much money you're actually giving away? That's thousands of dollars or that you're giving away over the years. And she told me that she actually had chosen not the specific funds, but she told the advisor what she wanted to invest in. So I thought, okay, so you actually choosing what you want to invest in and you're paying all those fees. Don't do that. Don't do that.
I mean, at that point, what value is the advisor bringing to the table at that point, right?
Yeah, basically zero.
I make all the decisions, I take all the risk, and I'm paying you for the privilege of you just basically selling me a piece of paper. So yeah, you're right. I agree with you. You know, that business model, it definitely leaves a lot to be desired. I think there's a lot of improvement in that business model.
Yeah, absolutely. So at that in 2008, I was sitting there in a huge office. Our manager had just a couple of months earlier had decided to build a new office, to open a new office, and he did that well. It was really beautiful. But what he forgot is that we actually needed to grow the team to fill that office. And instead, because of the crisis, the team became smaller and smaller. In the end, there were 14 people, and in a 500 square meters. I don't know how much that's in square feet.
It's about maybe 6,000 square feet. It's a big office. Yeah.
Yeah. So everyone of the team members could have built his own apartment in there. It was big enough for that. And that's pretty expensive, right? And we were paying a share of the cost. And it was hard to get new clients because, well, people were scared of investing or doing anything financial at that time. And I wanted to do something better. I wanted to learn how real wealth strategies work, whether markets are going up, down, or sideways. There's lots of people getting rich in a crisis. So I wanted to learn how to do that, because obviously where I was as a financial advisor, I didn't learn it.
Interesting.
I had one client sending me a long email complaining that all the information we sent them was basically information what's happening, which they could read in any newspaper as well, but not offering any solution. So I thought, okay, that's true. Actually, the only things I learned was not really how to build wealth, but how to sell financial products. I learned that pretty well, but that's not really what I wanted.
I understand perfectly. Yeah, absolutely. So what was your next step after that?
The next step was, well, I wanted to start learning how to do it differently. But since I told you already, I'd spent all the money that I made, had to make some money first. Again, what I did, I was a friend from college asked me, had taken over a real estate company, small real estate company from his parents. And they wanted to grow and they wanted to get investors in it. So they wanted to create some investment product and sell that. And they asked me if I could do that for them or with them. So that's what we did. Created some type of secured bond for real estate investments. And for the money I got for commissions for selling them, I used to start learning, educating myself. I started traveling the world to learn from some of the world's best trainers, people like Robert Kiyosaki and Harv Ecker and a couple of former fund managers. So I learned a lot about personal development, about financial development, and also how to teach all that.
Amazing. And if I may ask, Florian, these real estate investments, which countries, which regions of the world were they in?
That was in Austria, basically, Vienna and surroundings. What I did was finding investors to invest in those. They were very creative. They did some very interesting things. They started off with apartments, but they were looking for returns of 10% and higher. So they were pretty creative. One of the most interesting deals probably was they noticed that at the airport, the rental car companies were paying $50 per parking space a month to the airport. They were paying 100. They were paying 100 to the airport. And they asked him, hey, we have this property like 2 minutes drive away. Would you be interested in parking there for 50? Mm-hmm. We'll put up a washing facility there that's even better than what you have at the airport. We put everything you need, because it was actually a property of trucking company that went bankrupt. So they already had lots of those facilities there. So they rented it. In the end, the car rental companies were fighting for the contract to be able to rent there. And they made about 15% a year with that. And less than 8 years later, they sold it for 3 times what they paid for.
That's amazing. Yeah. And if I think about it, it sounds like it's a real estate type of investment, but it was more complicated, right? It was a real estate plus a business. It was kind of like a real estate plus entrepreneur type investment where you're buying a piece of land with a goal of developing a business on it, right? So this was much more complicated than just buying a piece of land, a real estate, renting it out, and then selling it 5 or 10 years later.
Well, what they did, they had the offer. This trucking company went bankrupt, and they thought, okay, we have this large parking space, we have the facility to wash and repair cars or trucks or buses, and they thought, what can we do with it? Who could be interested in renting it? The first people they asked was a bus company, the bus line to the airport, actually, if they wanted to park and service their buses there. The problem with the bus company, it's half public, and until they make a decision, you're old and gray. So the next idea they had, okay, who else needs parking around the airport? Were the rental companies, and they asked them, and they were super, super interested. So what they did was being creative, right? They saw a property and thought, okay, who else could be interested? What can we do, like with small adaptations, to give a higher value to our tenant, so we can get a higher return. Also, what they did when they got office space, they broke it. They built just a couple of walls and made very small offices that they rented out for super cheap, for $150 to $200 a month. Very small companies.
I love it. No, it's the typical example of, let's say you acquire this business which went bankrupt, so you're probably acquiring it at a good cost, right? And now you have all this supply. So you have a supply of parking spaces, a supply of car washing facilities, and now you're out there looking for demand. Who is demanding this? And you're trying to connect the supply and the demand, and it looks like you found it.
Yeah, exactly. And that with that creativity, they got a lot higher returns on their properties than you usually get. If you buy an apartment in Vienna and you rent it out, your return will be somewhere between 1% and 2%.
That seems very low to me. Wow.
It is because the buying is very expensive, and rents are relatively low compared to that. So, yeah, housing investments in Austria are not, or especially Vienna, are not that interesting as an investment. But commercial, with being creative, you can get nice returns.
Makes sense. Just a little bit more on, so there's this mindset in America, right? Because that's really what I'm familiar with, is the American mindset is the government has numerous incentives and tax structures, et cetera, to encourage investors to go and buy housing, fix it up, make it a nice, comfortable place for people to live. That's how the society is going to create quality housing for the citizens. And then you can make a good return. So in America, I can go to most major cities, not San Francisco where I live, but like most major cities towards, say, the Midwest, or maybe on the eastern seaboard there. And I can, like exactly what you mentioned, buy an apartment, rent it out, but I can get returns of 5, maybe even sometimes 10% with a little bit of appreciation. But even without appreciation, you can get 5%, 7% on just a simple leveraged buy and rent. And in America, this is always sold as, you need these kind of returns to generate the development, right? So I guess in Vienna, if I may ask, who has the incentive then to build apartments for rent?
Bigger companies, and that are well connected to the city itself. So it's pretty public, the building houses. It's large companies, yeah.
So maybe
for private people, it's pretty difficult. Also, the financing, you can go in the US, or UK works as well. If you go to the bank and say, I want to finance this apartment, this house, whatever, this is the rent I'm going to get out of it. They will say, okay, that's the value of the house, and this is the rent you're going to get. We're going to finance it.
Correct.
Here in Austria, they're going to ask you, okay, so how much do you earn? And that, who cares? It's about this property. No, how much do you earn? Can you, if you don't get any rent out of that property, can you still pay the mortgage? And if you can, they will finance it. But what do you do if you want to buy a second one? They won't give you the second one because you already have a mortgage on your income.
I see.
So becoming a real estate investor here is a lot more difficult. There's a lot more obstacles, and it's you really have to be creative to make it worthwhile.
It's very interesting. Very interesting. Yeah, it's every country does it a little bit differently. Yeah, because like you mentioned, here in the United States, once somebody buys one investment property, second investment property, if you do it under an LLC, etc., you can, like, if you want a commercial loan, they will take the rent, as you mentioned, the rent from your property into consideration of whether or not you can cover your loan, etc. And so it sounds like it's much easier to scale here in North America with rental properties than it might be in Vienna for an individual. Yeah,
absolutely. I'm not saying it's impossible here, just saying it's a bit harder.
Interesting. And so, yeah, so it sounds like you had a very successful time in this sort of real estate development type business. And then tell us how did you start your own company called the Money Hero Academy?
Mm-hmm. Yeah, it was pretty successful, and I already told you I was doing all those travels around the world to learn how to do the wealth building better. And I tested what I was learning in the real estate company, so I helped them grow their sales by 86% on average every year for 9 years. So they did make a couple of millions with that. But at some point, they found that actually they're paying too much commission for me and they don't want to grow that much anymore. So they told me we don't need that many investors anymore. And we don't want to pay your high commissions. So we went separate ways. And I wanted to do something different anyway at some point. I might have done it later. And at more or less at the same time, because the real estate business was running pretty smooth already. It didn't take me too much time. I had found sales partners, other financial advisors who were offering it to their clients, the investments. So it was working basically, 10 hours a week. So I joined a second company with a partner in solar energy. And then I didn't take care of that enough, and that partner bankrupted the company. And suddenly I was $500,000 in debt. Yes, that's about the feeling I had. $500,000 in debt, plus the easy or good income gone more or less at the same time. So what do you do? And I had maybe in this situation, interesting idea is, okay, I know what works with money. I help some people make millions. I know what doesn't work, what you shouldn't do to avoid to go through that into debt and all that. And I've learned from some of the greatest trainers in the world. And I have a lot of experience as financial advisors, the mistakes people do. So why not teach people money? How they can avoid the mistakes, how they can do more of the good stuff and become successful faster or from wherever they are. I know you can build wealth from zero or deep red numbers. You can still get out of it and build something. And so that's how I started the Money Hero Academy. At first, since I was working on bankruptcy, and I just started a Facebook group and said, okay, let me just see how people react if I give them the information, if I just put out some value and some content there. And so that's all I did in the beginning. And then I slowly started developing programs where, today I'm teaching the 3 pillars of financial success, or how I like to call them the 3 superpowers of the money hero, which is money mindset, how you think about money, your money management, how well you take care of what you have, and your money making. So especially making the money you have make more money for you in investing.
Excellent. And describe to me the typical client that you have, or the typical individual who seeks advice.
The typical client, is, most of them are self-employed or small business owners. And they are between 40, 45, starting to find out that they will have to do something different if they want to retire at any point in time with a good lifestyle. They do have some money to invest, but don't really know how to do it. So not happy with the returns they're getting. And especially now, since we have inflation at 10% or 8% or whatever it is, in reality, it's more, especially for the things we're buying. They're more like 15, 20% inflations there. And they see they're losing money.
Absolutely. I mean, and I understand what you mean, that it can be very difficult to be a small business owner if the business is not as financially successful as people would hope. And so, as on a personal level, both my parents operated their own small businesses, right? So I grew up in a household with two small businesses. And even though both my parents were very good at running their businesses, like doing what the business was, the financial side of it, I always talk about it in my program here. In North America, we don't educate people on basic finances. And so
that's not only North America, that's universal.
Yeah, and there you go. Maybe it's a global problem. But for example, my mother ran her own daycare, and she is wonderful with children. Her daycare was always full. The parents were very happy to bring her, their children, etc. So she was great at doing that, but she was not particularly great at running the financial side of the business and having money left over, investing, taking care of retirement, etc. And so now my parents are in their 70s, and they're doing okay, thank goodness. Their physical health, mental health is good, but their financial health is not as good as it should be. And I can understand why, you probably find a lot of small business owners, especially in their 40s right now, who are really realizing. I think a lot of people in their mid 30s, maybe mid 40s, that's when they first realize, okay, what does my retirement look like in 20 years? What are my savings? How is this going to grow? How is that going to grow? And when can I retire? And what does that retirement look like? And retirement is tough. It's people need a lot more money than they think they do. And so a lot of people, I think, are quite in for a shock in their 40s when they finally see what the next 20, 30 years looks like.
Absolutely. It would be, of course, it would be better to start with in their 20s or something. The earlier you start, the easier it is to make some changes. But it doesn't matter. Whenever you notice I've got to do something, then start right then. Start right then to do something. The earlier, the better. And we had inflation over the last, 100 years. On average, prices doubled every 20 years. Now, with the inflation we have now, prices double every 7 to 10 years. That's a lot faster if we keep that up for a while. But let's just say prices double every 20 years. So just keep the average we had. That means that if you calculate you want to have, $5,000 for your retirement, you actually need $10,000 in 20 years. So if you're 45 right now and you want to retire in 20 years, you actually need twice as much money as you thought.
Correct. It's an uphill battle, right? And Florian, sorry?
If you get returns of, 3-4% in whatever bank or bonds you do, or even if you go to the stock exchange and just buy the average and get 9% on average, that's still not enough, obviously.
Correct, absolutely. Especially like you said, with inflation being between 8%, 10%. Yeah, if at that point you're just keeping up with inflation, you're not really growing beyond it. It's a very challenging environment right now to grow someone's portfolio. And so that's why I'm really hopeful that the inflation will ease in the next year or two, and maybe we go back down to 3 or 4% or something more reasonable than where we are today.
Yeah, I think it's going to come back. It won't stay up that long, but I'm not sure if it's going to be next year.
So getting back to the small business owners that you work with, about the 3 pillars, right? Money making, money management, money mindset. Can you give us some tips, or maybe some tidbits of information that you think our listeners would benefit from?
Sure. Let's start with the money mindset, because I think that's the most important part to start at, because we are conditioned to think that things like money is the root of all evil, giving is better than receiving, it doesn't grow on trees, you have to work hard for money, right? We all learned those things. Now, what's the problem with that? If you think that you have to work hard for money, what are you probably going to do?
Work hard for money.
Work hard for money. Now, in your experience, are all those hardworking people rich?
No.
Most of them are broke, right? But we still believe it, we still do it, and we still teach it our kids, right? And then of course, there's a second thing you can do if you believe money, you have to work hard for money. If you say, I don't want to work hard, then you say things like money's not important, right? And then you just don't have any. Not the solution, not the best solution either, right? So you need to change those thoughts. Also, if you think that money is the root of all evil, you can never become rich because you don't want to be evil. So your subconscious is always going to protect you. If you make a lot of money, you're going to spend it because you don't want to be evil. So you got to identify those thoughts. What if you just sit down, put on some music or relax and write down what the first things that come up when you think about money, when you think about rich people. And when it's things like money doesn't grow on trees or money is the root of all evil, then write it down, identify it. Now you know this might be a problem. And then you write down new beliefs, more supportive ones. Right now, hey, actually, money is easy to get. I see people becoming millionaires all around. They've been printing trillions over the last couple of years. Actually, 80% of all dollars in existence have been printed over the last 2.5 years. So there's a million for you as well. Nobody will notice if you have one. Nobody will have less because of that. So you can just, money is the root of all evil, or rich people are greedy. You can write down whatever you want to believe, that you can do a lot of good with money, right? You can help a lot of people with money. Yeah. And once you have written down those new beliefs that you want to adopt that will help you to become rich, then just repeat them every day. How did you learn the old thoughts? Well, by hearing them lots of times. Now just read the new ones, like money is easy to get. I just have to be creative. I can help a lot of people if I have a lot of money. Just read that every day in the morning, in the evening, until your brain, your mind has learned that, and you've like overwritten the old beliefs.
Yeah, I think that's fantastic advice. And I just want to rewind it back to a couple of things you said. The first is, thank you for bringing this up. I agree completely that because we are printing money all the time, there's always more and more money in existence. And I think that's very important for people to realize that if somebody becomes wealthy, it's not a zero-sum game. It's not because that person had to take it from other people who now have less. It's possible for everyone to have more money next year than it is today because there's more and more money in existence all the time. Yeah. So I think this is one of those beliefs you have. Every time someone sees a wealthy person, they think, oh, he must have stolen it from all those poor individuals. And it's like, no, it's possible for everyone to have more money at the same time. And the other thing you mentioned, and this I have to remind myself, there's that one phrase that you mentioned a few times, right? Which is, money is the root of all evil, or something like that, right? And that's something everyone says. And the irony in that is a misquote. I think the real quote is something like, the love of money is the root of all evil. But for some reason, the way it made into movies and just popular culture, the love disappeared. So now it got simplified to, money is the root of all evil, which really is a mischaracterization even of, not just of reality, but even of the original quote. And so I agree with you. That's really not the way people should look at money.
Absolutely. And I even think the original quote, the love of money, it's okay to love money as long as it's not the only thing that you love.
Right. Absolutely. And I always try to look at money as something that can benefit my life or can benefit someone's life, right? Especially in a place like America where there isn't much of a social safety net, right? I mean, we hear people going bankrupt because they can't pay medical bills, right? If that person goes bankrupt because he can't pay for a surgery, he's not greedy, he's not evil, he just needs more money to get surgery so his life can be extended. I mean, how can you look at that person and say, it's bad for you to want more money? It's a horrible way to look at the world.
Yeah, money gives you options. It's definitely better to have money than not to have it.
Yeah. Absolutely. No, I agree fully. And you're right. It is a mindset, right? It is a mindset that for some reason our culture, even in the West, even in capitalistic America, there's this idea that, some people who want to be wealthier or something, wealth is something to be ashamed of, or you shouldn't aspire to be wealthy, or don't start your own business, etc. And it really is maybe the wrong mindset, right? I think if people were to, like I said, look at money as something that can improve their own life and look at how it can improve your life, how it can give you the options that you mentioned, how it can help you reach your own personal goals, whether it be retirement, whether it be spending more time with your family or whatever, that's how people should look at it, is it gives you options and it gives you freedom.
Yeah, absolutely. And if you think about this, giving is better than receiving. How does that work out? That's bad maths, right? If there's a giver, there has to be a receiver. And how can be one be better than the other if they can't exist without each other? That just doesn't work. But that's also actually a bad translation of the original quote, because the original one says it's better to be in a position where you can give than being in a position where you have to receive. So, which actually says it's better to be rich.
Interesting. I wasn't aware of that. Fascinating. Yeah. So, Florian, tell us a little bit more about the website, Money Hero Academy. I spent some time on the website, and there's one very interesting page where you describe various challenges that your clients can take. I think there were 7 or 8 different challenges. Maybe tell us a little bit more about those.
Yeah, there's I do run a money mindset challenge where we work exactly on that, defining what do you actually want. Most people don't get what they want because they don't know what they want. So we define what do you actually want, what's holding you back from that, those money beliefs. We create new money beliefs. So we work on your money mindset to turn you into a money magnet. And that's actually a good way to start with the Money Hero Academy because it's free. So join the 7-day challenge and learn something and have some fun at the same time. Then I have a longer program, which is actually 2 months, where we work on the 3 pillars. We work on money mindset, we go deeper, we work on creating a money management system, actually 2 money management systems, one for the business and one for personal. And we start a very simple, very basic investment strategy that can help people get 10, 15, 20, 30% a year, depending on the year, returns with just an hour or less than an hour a month.
Amazing. Wow. And can you tell me a little bit more about some of the ideas or strategies or philosophies behind getting those types of returns?
Yeah, that's basically a very, very simple. It's dollar cost averaging. We just modify it a little bit. We look for things that, especially today in where we have crashes, stocks coming down, commodities coming down, recession, all that, you can buy a lot of things cheap. We just don't know where the bottom will be. So buy every month and you will be somewhere close to the bottom. And if you do that, then you'll get pretty interesting returns. If you pick something that will survive the recession, of course, that will still be there. And if you modify a little bit, that actually every time it dropped compared to the last month, you buy a bit more, then you can even, if you just do normal dollar cost averaging in normal years, you will return like 15%, something with that. But if you buy even more every time it dropped and less every time it went up, you can go up to 20% that you return with the strategy. And if you have a year like this where things are dropping like crazy, then you can get 45%. I made 70% on the oil drop in 2020.
Incredible. Wow, that's amazing.
Just by buying every single month, and it only took 6 months, from dropping 85% in 3 months and going up 300% in the next 2 months, 2 or 3 months. And that's just buying every month, whatever. And you can do it with $10 if you don't have a lot of money. You can do it with $1,000 every month or with $10. It doesn't matter. Everyone can do that. And I'm returned in those 6 months, 70%.
That's incredible. And you mentioned oil specifically. Do you choose specific companies or actual funds or the actual commodity?
Well, I like, in that case, it was an ETF. Actually a leveraged ETF. So I was going twice the speed of oil. And I like commodities because they're not going to zero in a recession. After a recession, we will still use oil. We'll still use copper, gold. We'll still eat wheat. So I know this won't disappear. wherever it's going, I don't need to panic because it's gonna come back up at some point. That works, of course, if you go into stocks, you want to have like blue chip companies that are in different markets, in different regions, so they won't disappear as well, though this crisis is pretty global, so wherever you can't hide anywhere. But still, you want the bigger companies that already have a value, or take ETFs of sectors, industries, like whatever, healthcare or commodity or oil, energy, whatever, these things. So yeah, I do it I go for different investments in that with that strategy.
Excellent. On your website, I saw that there's a photo of you and Robert Kiyosaki. Can you tell us a little bit more about when did you meet Robert Kiyosaki and what was meeting him like?
Sure, I did. I'm training, or I'm one of my main mentors is a friend to Robert Kiyosaki, Blair Singer. The two of them learned together how to be trainers. So today, if you want to teach Robert's content, you have to learn from Blair first how to train. And out of that Blair Singer Training Academy, they organized a 5-day program with Kiyosaki in South Africa. 5-day program with I don't know, we were 60 people there maybe. So we were training 5 days. And yeah, that was amazing. He's very straight, very direct. If people hadn't prepared what he asked to prepare, they're straight out of the room and come back when you've got it. So he's not interested in like working, just talking and people listening and cheering him on. No, he really wants to get people to get results and get things done. And yeah, so very straight, very tough, but lots of value. It's very interesting to listen and learn and do.
Excellent. So you met him in South Africa, and I mean, when I read your profile, I was surprised that you had even heard of Robert Kiyosaki growing up in Europe and living in Europe. But is Robert Kiyosaki well known in Europe where you live?
If you ask me, yes, but probably no, not really. Only in the circle of people that are interested in financial education. Like his book, Rich Dad, Poor Dad, is the #1 bestseller in that area as well. So people who look for books, there's a German translation and probably many other languages as well. People looking for financial education, looking for books, and that will find him first.
That's right. Yeah. No, the Rich Dad Poor Dad book it's pretty much everyone I speak to, when I ask them about their favorite books and things that influence them, Rich Dad Poor Dad almost always comes up. It is one of those, it's probably one of the best-selling personal finance books in America since it was released, and probably still is today. It's very widely known. I'm just pleasantly surprised that even over in Europe, individuals like you hear about it, and that's incredible.
I was actually organizing cash flow games regularly. We had, during the lockdowns, we were playing online. And I had games going on with people from 4 different continents playing together. And we had four breakout rooms with different game hosts, and people from all over the world playing cash flow together. It was amazing.
That's excellent. That's actually really cool. And Florian, are there any particular finance or business books or YouTube channels that you recommend?
Well, I recommend 3 books to start with. #1 is The Richest Man in Babylon, which is a nice story, very easy read, and tells you the basic money management rule, which is pay yourself first, or actually spend less than you earn and invest the difference. Like if you do that, then you'll be better off than 90% of people. Like spend less than you earn, but most people don't get that. I don't know why, and invest the difference, so make that money work for you. That's all you learn in the book, but it's written very well. #2, we've already talked about Rich Dad Poor Dad. And #3 is Secrets of the Millionaire Mind by Harv Ecker. He's teaching you the differences between rich and poor mindsets. So going into more details than what we talked about here today. and also giving you a very a simple money management system that makes budgeting or managing your money, keeping more of your money a lot easier. So those 3 books are definitely very valuable.
Excellent. Thank you. Yeah, one of our previous guests also mentioned a book called Profits First, which is also similar to kind of what you mentioned, right? Is essentially basically take out a little bit before you start running your business, right? You have revenue, set some aside first, and then use the remainder to run your business. That way you're almost guaranteeing that you have a little bit of profit left over. Similar.
That's actually what I recommend to small business owners, is a combination of those 2 systems. For the business, we use profit first system, and for the money that you're taking for your personal, the salary you're paying yourself, we use T.R. Ecker's jar system. So those 2 are for business owners the perfect combination, in my opinion.
Excellent, thank you. Yeah, I'm going to put those 3 books in the show notes, and I'm going to put a link to your website, the Money Hero Academy, into the show notes as well. But what is the best way for people to get hold of you, Florian, if somebody would like to reach out to you?
Well, go to that moneyheroacademy.com is a good idea. Send an email to florian@moneyheroacademy.com. Or find me on Facebook, join the Money Hero Facebook group, where I share a lot of free tips, tricks, techniques. That's probably one of those is the best option.
That's excellent. Florian, thank you very much. Do you have any parting thoughts before we wrap up the interview?
Any parting thoughts? Well, the most important thing is that you start taking your finances in your own hand, that you take care of your money and you don't give the responsibility away to anyone else, because that anyone else, whose interest do they have in mind at first? Their own, not yours. So you have to take care of your finances and learn how to think about money, manage your money, and make it grow for you.
Excellent. Very well said. I agree 100%. And thank you very much, Danke schön, Florian of the Money Hero Academy. And hope to have you back on the program at some point in the future.
I'll be happy to come back.
Thanks very much.